Hey, what's up you guys? Welcome back to part 3 of my Power 3 Bootcamp series. And in today's video, we're about to get into backtesting and application of the Power 3 concept given what we've already learned so far. So without further ado, let's jump right into the video. Alright you guys, so basically the first section we talked about some basic stuff. I'm not going to read all of this. You can go through and read it if you want, just to get a feel for what part 1 and part 2 is. If you haven't seen those, I highly suggest that you jump into those before you jump into this one. If you're more advanced, you would probably like this one a lot better because we're going to go over a lot of different things, basically pulling all this stuff together, as it says, putting things together. Okay, so yeah, the example that we're going to be looking at is from this weekly candle. And in this weekly candle, we're about to break this down from the weekly and daily range, right? And we're going to use everything that we've learned so far from the last 2 episodes. So again, if you haven't watched part 1 and part 2, I'm going to put a card above this video. So if you haven't actually watched that, you should probably do that right now before you watch this. But if you're more advanced, this should be a piece of cake. But yeah, guys, we're going to look at this weekly candle here and all the daily ranges related. So yeah, let's jump into it. So we can see what day this is, right? This is January 16th, 2024. So if you want to go back into your own charts and pull up that chart and see things for yourself, you can do that. And yeah, so again, we have this weekly open price here. One thing you do want to notice that I didn't label in this video is this, or in this PDF, we have this order block here on the weekly chart. So that also plays a role from this weekly or upper portion of this weekly candle. Extend that across. It's a sensitive level for the order block. And then you also look at the 50%, and we could see how from this it was respected and it just wicked below, meaning that, you know, there's reason for us to keep going higher. If we would have broke down below this low, or if we would have, you know, even reached down here quickly and smashed through the midpoint, right, that would have likely indicated that we're probably going to reach even lower, potentially this low and this low, but that didn't happen. So yeah, moving forward, you want to keep this high in mind from the previous week right here, because this high and this high for this candle was the draw on liquidity. And we're going to actually get into something at the end of the video that discusses how you could have potentially anticipated this high forming as well. So you want to stick around to the end of the video to see what that tactic is. So yeah, here's a daily view now. So remember the weekly candle we were just looking at, right? A wick lower, right? A wick lower into this order block. Open, drop below the open price on the weekly. And then you could see price rallied up, right? Accumulation, manipulation, lower to a discount to then rally higher and attack the highs, right? Like I said, keep your eyes on this high from the weekly candle, okay? You could see how that was targeted. You could see how this liquidity was layered here, how it did not take out buy side liquidity, and then sell side was taken out here and here as well as here. So all the sell side was neutralized before price rallied. Why is that? Well, based on what we've discussed about Power 3, smart money likes to accumulate its orders below sell side liquidity, specific sell side liquidity points in a discount below the weekly open price, to then pair their significant large range buys with sell side liquidity. Okay, because there has to be a winner and a loser, right? And in this case, the buyers were the winners, and the losers giving the other side of smart money's trade was the sell side liquidity. You see how this didn't get tapped into. Another observation you could see is this fair value gap here, this inversion fair value gap, which acted as support. And if you break this down with a fib, you could see that there's the 25, 50, 75% level. Price wick through, but it hit the low of it, and then it came off of that low, failing to break into here, right? So that's showing strength, right? And this was invalidated when price came up here, right? And there was a whole process with that, which I'm not going to get into right now. But yeah, as I said, sell side liquidity paired with smart money buys. Previous week's high was taken out, and then also this previous week's high was also taken out. So previous week's highs and previous week's lows, you always want to have some type of understanding of where those are at, because those act as liquidity targets. And I gave you guys a PDF showing these significant liquidity pools that you can go ahead and start studying. It's not a, you know, it's not a like holy grail or anything, but it is very, very useful, right? It helps you with price navigation. So definitely go download that PDF from part 2. Okay, so me switching to this, I hope I didn't lose you, right? Because this drop here on this daily chart is this low here, and this drop. And remember those 3 layered highs that we saw right here? 1, 2, 3. I mean, you could even say 4. Well, if we go to this chart, we could see that 1, 2, 3, 4, right? 5 actually from this view. 1, 2, 3, 4, 5. Okay, so price dug lower. Here's the pairing of orders down here to the sell side. So they drove price down. What is that? So here's the open price. Here's the Sunday's open price. That's the weekly open. Price dug down below. Where's the best buys located? Best buys are located below Sunday's open price for the weekly range, right? Like we've discussed. You can visually see that, right? It dropped down to a PD array. Okay, a discount PD array. What discount PD array from this perspective? It dropped down below significant lows, right? Sell side liquidity. So it paired their buys with willing sellers below sell side liquidity. And then it had layered highs, which is buy side liquidity. And then of course we have the previous week's high. So we have layered highs here as well as a high here that was also layered. Okay, so this is also the previous week's high that I was talking about with this one as well. Okay, so we have 2 previous week's highs. We have 3 layered highs as well as a 4th one as price dug lower, pairing sell side liquidity with smart money buys. And then price gave us a failure swing here. So Tuesday, Wednesday has a 70% chance of creating the low of the week or the high of the week. In this case, it's the low because we were in a bullish market. So I hope that makes sense, right? And if this doesn't make sense, you need to go back and watch the videos. So again, I had that pinned. I'll pin it again right here just so you guys, if you missed it, right, you're not going to miss it this time, to go back and watch that if this isn't making any sense. Okay, so digging into further context, okay, we see how price dropped down to a discount array. Okay, what's that discount array? Well, it's the sell side. And if you go to the 4-hour chart, which I don't believe I do in this PDF, you could see how there's a 4-hour fair value gap as well. Okay, and price, I don't know why I put order block there. Sorry about that. But yeah, there's a 4-hour fair value gap. You see the midpoint was beautifully respected. That's algorithmic. On Tuesday and Wednesday, price also dug, like I said, below the Sunday's open price. And then we see an aggressive run. Okay, and when we get into the daily range, we're going to break down each of these daily ranges within this weekly time frame. So just take this into context, okay? Just looking at this framework, can you see the YouTube model anywhere? Right? Ask yourself that question. Because if you can, and you know that this takes a little bit of time, we just framed this potential buy scenario in a bullish market from the 1-hour chart. You could have entered wherever your model is showing. Okay, in this case, the run-on stops was here. All right. Then we have a hard shift in market structure with a failure swing at a higher time frame discount array in a bullish market below Sunday's open price. I hope that is kicking some lights on in your head, because and think about it, this is a bullish candle. Okay, this is one big bullish candle. Imagine the open price is here, so the flat low part of the weekly candle is here. Remember how we looked at it from the week? I'm not going to go back, but remember how we looked at the weekly candle, how it wicked lower into the order block, and there's also an order block on the weekly, right? But I didn't mark that. Just remember that was there, or rewind in the video and go look at it. But just think about it, right? Price dug lower into a discount array, just as was described in the last video, okay? And then price rallies away, aiming for, at a minimum, these highs, or even at a minimum this high. You could have entered here, price ran up here, and there's your ends YouTube model from ICT. There it is right there. Boom, and you're done for the week. Just think about it, right? You don't have to make this complicated. But this again, this is the 1-hour chart, and we could see how this logic is in effect. This is the bullish power 3. So if you have any questions about this, please leave them in the comments. I'd be happy to get back to you about those questions. But again, I hope this is making crystal clear sense. We can also see how this New York AM session created the low of the day. Here, you see this green. I hope this thing isn't getting in the way. But you see this little green area right there, where the little bubble's at? That green area is AM session. In the previous video, I talked about how London session many times is the creator of the higher or low of the day for daily ranges. These little things in the chart, these are the time windows, right? The red is like the 9 p.m. Pacific Standard Time or 12 a.m. Eastern for the daily open, which is where these are pinned at, right? This is for this day on Tuesday. And we'll get into this deeper, but I just want you to see, like, just visually right now, because there's context to it. So the New York AM session sometimes creates a low like it did here for the day, and sometimes the London session creates a low for the day, right? Depends on the context, depends on what's happening in the price action, and we could see how the low generally forms in one of these two areas. Okay, don't overcomplicate it. Yes, you're not going to be perfect, right? Admit that to yourself, like we discussed in the last video. Admit it to yourself. You're not going to be perfect. You're going to miss it. It's not going to make sense sometimes. Things are going to be really sloppy, maybe in a consolidation, but nonetheless, you got to be flexible, okay, and aware, and you got to be observant, okay, and be willing to accept that you will be wrong at some point, right? You're not going to be perfect, but this helps you get right more than you're wrong. It helps you navigate price. Okay, so I hope this makes sense, guys. So yeah, there's an entry here that could have been taken with the YouTube model. Price rallied up here. We could see how price took out this low here. We're going to dig into this portion of price action a little bit as we move along. But yeah, discount to premium for targeting, okay, for framework, right? Manipulation lower. Tuesday, Wednesday creates the low of the week. Rallies up. We have clear engineered liquidity here. And we also had this previous week's high. And again, later we're going to discuss how we got up into here. Okay, so let's move forward. So like I said, we have engineered liquidity, right? And that acted as a magnet after price paired sell side liquidity for smart money buys here inside that 4-hour fair value gap, as well as, remember, this was the wick on that weekly candle that wicked into the 4-hour order block that we just looked at. Okay, and if you're confused, go back and look at it, right? You can also see how this Tuesday move dropped into this order block here, right? As well as an inversion fair value gap. And then price rallied up just to take these stops out, and then it slammed down lower again. That all happened in AM session. But think about it. Run on stops here. There's a shift in market structure here. Okay. And then price rallied up. That's a move in itself to try to aim for this. So even if you were still looking for this buy and price didn't come down here yet, that was an opportunity too, trusting the bullish bias, because nothing's changed for bullishness. Your bias shouldn't switch back and forth like constantly, like longer term, like, sometimes there's retracements in bullish markets, so that would make price on the lower time frame drop, reaching down for, again, some form of a discount PD array in a bullish market. So that's what happened here. But that's also a way you can frame counter trend moves, which I'll discuss in a later video. Okay, so I hope all this stuff makes sense. So what we're going to dig into now is the Tuesday. Okay, so this is the Tuesday price action here that we're going to dig into. Right, and if I lost you, just rewind real quick and look at the time frames and sit and study with it for a little bit, right? Like study what these candles, you should be looking at these moves as bigger, higher time frame candles being printed. The open price helps you identify that because you get to see where the candle starts, which is the open price, right? On those daily or weekly candles, right? The daily candles specifically for something like this, because you could see that daily opens. So these little groups of price delivery, they are creating daily candles. When I look at this, I see daily candles. Okay, the whole 1-hour time frame, I see a weekly candle. Okay, so when you're on those lower time frames, keep that perspective in mind. It's very powerful. So let's move along. So we could see how Sunday and Monday was pretty sloppy, right? Here's Sunday, here's Monday. Monday was also a U.S. holiday on this day, which was, I believe, the 15th of January. We can see how it was pretty sloppy. And remember, from the weekly breakdown of the weekly range, Sunday, Monday creates consolidation manipulation. We anticipate that. Okay, Tuesday, Wednesday creates 70% of the time the high or low of the week, depending on bias. In this case, it was bullish. And if we hit a higher time frame array, we generally can create a retracement. Okay, so that's a rule of thumb you should have on your desk constantly. Like, you should always be thinking about that because that's a common characteristic. Okay, and again, just to highlight once again, Tuesday created the low of the day in London. All right, Wednesday on the other slide, we saw how Wednesday creates the low of the day in New York AM session. So I discussed both of those perspectives in the previous video. Right. So again, if you're confused, definitely go watch those part 1 and part 2 again, so this can make more sense. Right. But yeah, I hope this is making sense for those of you that do have a slight grasp on this. We could see how this is the open price. We could see how this was a bullish candle, was a bullish move, or actually I think this was an indecision candle, right? Because here's the open, And, somewhere over here, one of these candles is the close. I can't really see the time. We do have the end of the PM session here, which is at 1 p.m. PST or 4 p.m. Eastern. So sometimes it trades like half hour after. But yeah, the close is basically right here close to the daily open price at 9 a.m. Pacific Standard Time. So that's an indecision candle. That's a wick lower and a wick higher. And the body was non-existent because the open and the close is really close to each other. So you can imagine the doji that was probably created. Okay, right? So now we're going to dig into further details as far as this Tuesday is concerned. Given the whole breakdown that we've done already, right? We've broken it down from the weekly to the daily to the 1 hour. Now we're on the 15-minute, observing each daily range within that weekly range we looked at from the 1 hour chart previously. Okay, price dug lower, came down into a higher time frame discount array, right? Here's the open price right here. Price shot lower, hit a fair value gap to the left. All right, and then price rallied up, shifting market structure here aggressively. There's 2 shifts of market structure. And maybe this didn't make sense to you. That means it's not your trade. This buy right here wouldn't have been your trade, so you would have nothing to be upset about. Right? It has to make sense. It has to be able to be broken down and understood by you. Otherwise, it's just not your time to trade, right? There's a time and a place for you to take a trade. And if it doesn't make sense, the current condition, you need to practice discipline and sit out, because that's the main thing that screws everybody over, right? Is you're trying to get in a trade just because you're sitting at the chart. This isn't like a job, okay? You clock in, sometimes you're not going to make money, right? You don't just show up and because you spent time, you're going to make money. You got to transfer your mindset into something different, into a trader mindset, and sometimes you won't make money. Sometimes you will lose money. It is what it is, okay? But this logic, again, helps you narrow out where the best buys are below the daily open price, below the Sunday's open price, and the best sells above, right? So in this case, we could see the best buys came from below. There was a discount array, aim for a premium array, right? Discount array, premium arrays are these highs or this fair value gap. All right. Maybe you didn't anticipate. Maybe you thought Tuesday would have been the low of the week. That logic could have got you into trusting this. Although it did turn around and dig lower one more time, it didn't do that till the next day. So maybe this does make sense to you. I hope it does. Right? If this first example makes sense to you, comment in the comment section. Say the first example made sense to me and explain why. Right? Explain why to me. Okay? Or any other comments and thoughts and concerns you have. Okay? So yeah, I hope all this makes sense. So let's move along. This was a bullish power of 3 in in this list of examples. So again, I want to come back to some visuals here. I want to come back to this chart, daily and weekly ranges, just to remind you and really drive this home, because I swear to you, just like I said in another video, this is so powerful and so helpful. Like this one piece is so important. At least it was for me. It may not be like that with everybody, but this one piece was so brought me so much clarity. This one piece brought me so much clarity. It's just ridiculous. Okay, from just reading price on lower time frames all the way to the higher time frames and understanding the story. Some things will make more sense for other people, and not everything is going to resonate with you. Like, I don't generally trade the optimal trade entry, right? I mean, I see it, right? But that's not the thing that I resonated with. And there's a lot of people that resonate with it. I understand it a whole lot more and can execute it now, but it's not my main go-to, right? I use breakers, market maker models. Power 3 is constantly involved, right? I use continuation variations of my models, because every model you have as an ICT trader has a continuation model basically incorporated in it from what I've studied and seen. Breakers have it. The YouTube model has it as prices running away. Like right here, prices ran below this low. There was if you go to the 1 minute, you could see there was another swing high here. It shifted. And then inside this candle, maybe there's a retracement back into a lower time frame fair value gap. That's a run on stops, shift in market structure, and then a continuation variation of the YouTube model inside a kill zone. Okay, I hope that made sense. And the same goes with breakers. Same goes with, whatever move you're trying to utilize. But it just matters what you're comfortable with. Maybe you're not comfortable when price runs like this. Then that's not your trade. then that's not what your approach is, right? You have to be able to identify these things. And again, that's one of those things that takes time. It takes time. That's why you can't master this in a week, in a day, from one video. Even from my videos, if you just watch them and you don't apply them and start and practice, it's useless to you. You waste your time, because there's vicious, amazingly intelligent minds in this game that are here to take your money, and they're ruthless, right? And honestly, in the market, if I have an opportunity, it doesn't matter who's on the other side. I'm getting my bag. I have responsibilities to take care of. Okay, so it is what it is. It's you either kill or be killed, right? You're either prepared or you become a victim, and we are victims at the very beginning. We are victims in this industry at the very beginning. I lost like 12K the first year, not knowing what the hell I was doing, right? After 4 years, I've been able to gain clarity, right? And I've been able to be consistent. I've been able to, help others and do these amazing things. Okay. Not a millionaire, but regardless, I can be in the market and find consistent setups, and I prove it. Okay, I've proven it on this channel, and I've also proven it many hundreds of examples, maybe even more than hundreds, maybe thousands at this point in the last 3-4 years of examples of on point bias and everything. Okay, and all of these components play a huge role in my ability to do that. Okay, and anyone that I've helped, or anyone that I know that trades ICT, they understand this, that are consistent. They understand these things because this is the market. There's even deeper breakdowns that I'm going to probably break into at some point for amplifications that'll teach you about this and in further detail, like things that have to do with dealing ranges. There's so many different things that you can utilize this for as well. And like I said in another video, this looks familiar, right? This is a breaker, right? In many cases, this is a breaker. Right, this here on the 1 minute time frame, it could be a market maker sell model, right? In this little fractal example in price, okay, and we could discuss that later. But yeah, I just wanted to bring this up so you could see this again and understand this, right? Asia, London, right? It's generally, trading indices. Sometimes it happens with the high or low of the day. It happens in London. Sometimes it happens in New York AM session, okay, and then many times New York session is a continuation. We also have these two open prices. Okay, we got the 9 p.m. Pacific Standard Time, and then we also have the 6:30 a.m. Pacific Standard Time for the New York Open. The 5:30 time that you hear, or 8:30 time that you hear, that's a bond yield open for the market, the bond yields. Okay, and that's when ICT says to start your hunt. Okay, be on the chart. It's like you have to clock in at that time. So don't be confused about all these open prices. Just write down their use cases. These use cases have to do with analyzing the daily range and where the best buys and best sells will come from, depending on bias. And then the Sunday's open price has to do with a similar thing, but on a higher time frame perspective for the weekly range. And these are for the daily ranges. Okay, so I hope this stuff makes sense. I have gotten a lot of questions in the last couple of days. And I feel like, it's a lot of it has to do with a lack of application, right? It's just I hear the video and it's like, okay, it seems kind of complicated, but you haven't went in and actually got your hands dirty as much as you should have, right? Or maybe you just heard this and you just haven't had a chance to, right? So don't let that confusion scare you or make you feel like, oh, this is impossible or, oh, this and that, because it's not, I promise you, okay? And that's why I'm here. I'm trying to help as many people as I can reach clarity, right? As it says, the lingo, right? Confusion to clarity, where confusion comes to die. Okay. So yeah, I hope this is clear, right? Make sure you take a screenshot of that. Okay. So moving on, we could see how, this is a Wednesday. Okay. So let's look at this arrow here. This is a Wednesday. We're going to dig into the Wednesday. Wednesday created the low of the day inside this New York AM session, as we just kind of went over. And then we also can see how Wednesday also led to the low of the week, right? And remember from the other screenshots, this was a higher time frame order block. It was also a higher time frame 4-hour fair value gap that price dug into, and then it respected it. Here's the shift in market structure above this high after a run on stops, pairing smart money buys with willing sellers to then take profits where buyers are at, right? So they sold off their, they pair up buys with sell side to then target buy side, or vice versa. They pair up buy side to target sell side, right? So they enter here, offload positions here. And again, this is the previous week's high. So let's move on. So digging a little further into the Wednesday price action on the 15-minute from the 1 hour, we could see again, I highlighted the weekly order block. I mean the weekly fair value gap. Sorry, that mistake is there. Hope it doesn't confuse you. This is a fair value gap. This isn't an order block. Okay. Well, it is. It's a weekly order block, but it's not in this. This isn't the outline of that. This is a fair value gap. Okay. And you can see the midpoint. Price respected the midpoint. It also respected the 25% of it if you broke that down. And again, just to remind you, again, smart money buys paired with 1 hour time frame sell side liquidity to then set the low of the week, as well as in the daily range, set the low of the day. We could also, you could argue and say that, this also set a potential high of the day because it was bearish to get price down into. That's a higher time frame. It's just a retracement, a lower time frame retracement within a higher time frame bias context. Okay, or narrative. That's why it's so important to understand the higher time frame, because maybe you saw this and you probably, if you were stuck on the 15 or the 5 or whatever lower time frame, you probably would have been thrown off like, oh my God, like it's selling off. And then you get screwed over because it turns around because you're on the lower time frame. You're not seeing the real story, and the navigation is just not there yet. And that's okay. Watching videos like this and spending time studying things like this, that's what gets you there. It'll help you get there. And again, I'm here to help. So if you have questions, leave them in the comments down below. And if you're getting value from this video, I really appreciate it if you could like, comment, and subscribe and share the video with anyone you think this would be helpful to. It really helps the channel out, right? Channel's pretty small, so any support is definitely appreciated. So, and those who appreciate me thus far, you are truly appreciated, and I thank you for your trust and your time. So yeah, this drop was manipulation, just to get us down to the discount array to pair smart money buys with willing sellers below sell side liquidity. Okay, so moving on to the next one, we could see how the engineered liquidity was taken. Again, like I was talking about earlier, this is a beautiful example as well of the same logic that happened over here, happening over here as price is moving. So if you miss this setup, who cares? Keep your mind on the rules. Run on stops, right? And then dig down into the lower time frame and go study here. I'm gonna leave that for you to do. Go study in here and see if you can find any models that you understand, right? Or maybe your model, right? Maybe your model is showing up in there. Of course, this is the Thursday price action we're gonna get into. So here's the Thursday price action. Well, okay, I guess it already showed up, right? There's probably even a sooner entry here. Okay, there's probably an even sooner entry here. But the same logic that we used over here inside this 4 hour fair value gap is the same one that we're using here with this 1 hour fair value gap. Price dug down below, pairing smart money buys, the continuation buys, with another previous week's high above here. And then price, paired those sell side orders with buy side smart money buys, shifted market structure here. And even if you would have entered here and put your stop down below this fair value gap, you could see there's the inversion fair value gap. There's these two fair value gaps here, and price, rallied up. I mean, this here on NASDAQ is like 20 points. Look, from, somewhere in here, we have 17,100. This high up here is above 1720. So that's already 20 plus points right there. So even this is a decent move inside PM session, Whoops, let me go. So yeah, even this, like I said, this is even a decent move as well to end the day. Okay, so you could have got there, or like I said, if you go to the lower time frames, you'll probably see this happening sooner down here because price is fractal. So again, I hope this makes sense. And sometimes when price is predisposed to go higher faster or move lower faster, whatever the case may be, sometimes it's not even going to really do much of a retracement. This was in a hurry because, it was reaching for something and it was super excited. DXY was super bearish. Oh, well, DXY in this case was pretty consolidation driven. But, nonetheless, we could see how it was excited to try to get above the previous week's high and create new all-time highs. So yeah, engineered liquidity was taken. Previous week's high was then attacked. And then we can also see that the 6:30 open price was significant. The 6:30 open price was significant. AM Pacific Standard Time, when price is accelerating, right? And it's kind of far from the open price on the daily. We could see how the 6:30 open price acts as the same power of 3 reference, right? Price got down below that. The best sells or best buys came from below that inside a discount array to then target a premium array, right? This high is a premium array. This fair value gap is a premium array. This high is a premium array. Okay, if you go from high to low, you could see that, right? And you could see the premium and discount. From this low to that high, you could see equilibrium is somewhere in here from this low to that high. You could see equilibrium was somewhere around here. So it drove itself into a discount and then price rallied up. Okay. So yeah, when price gets above all-time highs, it's kind of difficult to determine, where price could potentially reach for. And like I said, I'm going to show you guys something that maybe you haven't learned before, right? Or maybe you have, because ICT has talked about it, but I'm going to be another reminder of another tool that's extremely valuable. You see this 17,800 price? Well, all this stuff considered that we just discussed, right, as far as power 3 is concerned, and just the dynamic of how price is delivered. Once we got up above this previous week's high, that was my initial target for the week anyways. Okay, so if it would have been yours too, it doesn't matter how far it goes. All you got to do is get from discount to premium, and that's your range and you're done. Right? You could keep it easy. You don't got to be pressurizing yourself so much. All right, but once we got above this high, how could we have determined how price, like how far it could have went? Well, to get specific levels, this high to this low was when price started running, right? And then that shift in market structure was significant, right? It shifted back to bullish, changed its state of delivery. These down candles is also an order block. This is the 1 hour. If you go to the 2 hour, you could see how this is a bullish order block. Price, kind of played around in there, and the price expanded away. But because we were above this previous week's high, and this is a significant low, right? This is where the move basically started from. We could then start gauging how high price could potentially go by using this price structure here. Skip forward, and then I believe this is Friday, right? So we could see how the same rules apply, right? We're going to go through this one quick, right? Because this is just really one-sided, and we're going to get to how this high and the high above it actually is one more above it could have been looked at, and even this high, right? We could even gauge that this high was going to be attacked, right? Okay, with what I'm going to teach you next. So yeah, we could see consolidation, manipulation down below, set the low of the day in New York AM session, and the price rallied away. Right, and if you dig down to the lower time frames, you could dig and see if you have any type of moves in there you could have entered. But I mean, just off this, you could see that if you trusted bias to be bullish still, right, you could have continued going higher. But once we got above this previous week's high, I was done. Right, I wasn't going to participate because you never know. But if you wanted to get a feel for it, what could happen, right, or if you're in a different situation where highs are trying to be met, and you just want to try to be more accurate with targeting, you can use this little method here. Okay, you use that same price structure that I was telling you about, right? And again, you're not going to be perfect, right? You see how we basically could have mapped that out, and then price got all the way up to here, right? And you're just going to see the precision, how insane the precision is. Just using this logic, how price started here, price is rallying, we got above the previous week's high. How can we gauge how high it can go? You can use this where it started, right? The move where it started, if there's a price structure that looks like this. You could just use this order block and just this whole perspective here and then extend price higher, and then we could see how price basically hit all these levels. Boom, boom. And it's not random, okay? Even here, boom, right above the previous week's high. So just, take this piece of information here and just go play with it. Go look around for these types of moves, right? When price does this type of thing and it expands and breaks a swing high and the price just extends, start looking for these types of signatures and then just start trying to gauge, right? Like place it and then gauge and study those levels, how price reaches up into those levels. So yeah, I hope this stuff made sense. So if you have any questions, again, just definitely let me know in the comments. If you haven't watched the other videos, you should absolutely do so because there's so much stuff to cover, right? Like there's so many things you need to figure out. And things can be less complicated than you make them. But yeah, guys, with that being said, I hope you enjoyed this series, and I will see y'all on the next one.
Okay, then.